Good morning, everyone. It's 9:31. Let's get started. I apologize if you joined on Thursday. We had a technical issue. I believe some people couldn't see the slides and some couldn't interact. That's one other reason we are doing the Thursday again today. Maybe a little bit shorter so it gives you an idea before we go into day two. And if you haven't joined, if you didn't join on Thursday, this one will be a refresher for you to understand what we discussed. Just quickly, after real estate is an investing arm, what I do. My name is Johnbosco. I'm with the LPT Realty, and I'm one of the partners in after real estate group. And we do nationally investment, and that is strong yield, secondary market to steady landlord-friendly metros. We focus on three things: sourcing, clean underwriting, and execution. So your buy, hold, and sell decisions become obvious. Wearing my realtor hat, LPT, my team uses LPT power tools and the power packs, along with our unique 11-day launch to sold program. We use pre-marketing, pricing psychology, and a concentrated showing window to drive urgency and cleaner offer and to create competition. And that's primarily what we do from for regular homeowners and home seller and buyers. We are truly a full service, including post-closing help and vendor coordination, reminders, and first to 30-day check-ins. We do rest of we treat our clients as our friends rest of their uh, lifetime. Uh, the to be clear, we are not talking about regular buying and selling in this semi series. We are primarily talking about how to get started in real estate as an investor, passive investor. When I say passive investor, you have a job and uh, you want to invest your money wisely and safely, and it grows for you to use in your future. Okay. Um, just give an idea what the 4 days sessions are. The first day is now. We are doing it again, which is basically why real estate is an investment. So it gives you an idea whether it fits your investment goal and what are the strategies that you can do in real estate investments. As day two, we'll be doing, which will start at 10 o'clock today. That is day two. Deal math, basic formulas like the cap rate, cash on cash, DSCR, break even. When is your break even? What is your break even for your investment? It is an investment. It is not your home. You have to treat it like an investment, like you do for stock or you do a business. So you got to know your numbers. Third day, which is Tuesday at 8 p.m. Eastern Time, we'll be start talking um, find and fund. Um, Primarily from a passive investor, we are going to be talking about how you are going to depend on an agent or somebody to find your deals and how you can fund your deals. What are the ways you can fund your deals? Fourth day, we are going to talk about because most of you, if you are going to invest, you are going to be buying a rental, whether it's long term or short term, and what to do after you buy to be rent ready and how to execute your whole rental process. What are the things you need to look at it high level? We'll talk about it. Okay. Um, let's do talk about there are four wealth levers when you talk about real estate investment. These are the four things you can adjust and maximize if you want to look at it that way. And also, this is what you will look at it when you do evaluation of your investment. First one is cash flow. Obviously, after all your expense, everything you paid, whatever income you get, the net income is your cash flow. Okay. The second one is loan amortization. Loan amortization is pretty much reducing your principal debt. Assuming you have a loan in the account and the principal is getting reduced year by year. So that is your that adds to your equity. Appreciation is something you cannot control. It is controlled by the market, but you can control getting in, not getting after. Once you have won the property, you cannot control the appreciation. Right. So whatever the appreciation it happens, it's controlled by market at that point. Um, Fourth one is obviously the tax benefits. You can depreciate your investment and you can claim your passive losses. Let's assume you had a year, you had rent, and the expenses are more than the rent. Then you have your net loss you can claim, which eventually will reduce your regular income. So it is a tax benefit either way. Okay. And moving on, what are the things you can adjust to maximize your investment? Okay, you got the investment, you bought the property, and how do you maximize? Or you are evaluating a deal and looking at base, you can maximize before you can say, okay, this is a good deal. I can go in, make these changes, and make the maximum out of the investment, right? So it is to evaluate, and once you are in the investment, you keep evaluating and adjusting these knobs to make the investment produce the maximum. The first one is vacancy. Vacancy, it is partly controlled by the market, but again, if you have a nice property, the best in the block, um, you can generate demand because everybody would want it. So that will reduce the vacancy, and it is you can adjust the price. That's another way. The rent you can adjust and make it attractive for most renter, qualified renter, not all the renters, right? We are looking for qualified, good qualified renters. Second one is repair and capex, how you manage your repairs and how you manage your capital expenditure. Sometimes it is easy to just fix it, which is cheaper, or replace it. That decision can make for that year because every year you are going to be evaluating. So you have to evaluate whether this year doing a capex is worth for me or doing a repair is good for me. Okay. Um, The third one is leverage, of course. That is your debt. If you unless you paid full cash, leverage is not something you can control directly, but you can shop. But that's the maximum you can do, or you can refinance at some point. But the interest rate, the points, the cost, everything is determined by the person or the bank who has the money. That's what they control, right? Liquidity, how much liquid money you have for capital expense, because you gotta have, it's a business. Treat it like a business. If you are into real estate, it is a business that you are managing a business. Okay, you have to have liquidity for emergencies, for whatever, right? The water heater blows up, so you got to have liquid money to replace it, or your credit, whatever, right? A line of credit, whatever you have. Then the third one is regulation. I put short-term rental as um, because they have more regulation than long-term rental. Long-term rental, you have local township or county, city permit you might need, and they'll do inspection, whatever needed. But short-term rental has much more regulation. Sometimes some places don't allow, some towns doesn't allow short-term rental. Some town have much more stringent rules regulations for short-term rental, and the permits are much higher, cost is higher. Every year you are going to be spending for permit, so that is a cost to associated with it. So that is an expense to the investment. All right, moving on. Give me a second. Now let's see what are the strategies you can do, because um, there are four type of strategies you can do. That's pretty much what it is. Whether you are doing a single family, multi-family, multi-unit, commercial, all these have the same similar four strategies. One is flip, you buy, fix it, make it better, sell it. The another one is BRRRR, usually it is called BRRR, which means buy, renovate, rent, renovate, rent, and keep repeating rent and renovate over time and time. Normally, any property you are looking between 7 to 10 years, it needs some renovation. Okay, some kind of, whether it's major or minor, it's going to require some kind of renovation to keep the property up to date. Okay. Then long-term rental. The main difference between BRRRR and long-term rental is long-term rental, probably you are going to get a property that just needs cosmetic painting, and you can rent it away. BRRRR, a property will require some kind of renovation initially to get up to the code. That's where you get in BRRRR. But long-term rental, once after 7-10 years, when it needs its renovation, it becomes a rent, renovate, rent, repeat will happen for long-term rental at that point. Short-term rental have same thing, and short-term rental also, you can buy brand new property, but still you got to spend some money and time to set it up for short-term rental, for furniture, whatever, furnishing it, whatever it needs, right? And setting the advertisement, signing up with the Airbnb, VRBO, and all those places. So that is going to take some time. Okay, that's initially you are going to spend a month or two. Okay, sorry. Then, yeah, let's talk about quickly the myths and realities. Okay, we normally hear this often, and I have seen when I work with my client, whether it's my investor clients or my investment partners. Okay, uh, there is a perfect deal. It's a myth. There's nothing called perfect deal. Okay, every deal is going to have some flop, and you are not going to get a unicorn. You may, sometimes it works because it's a luck, it's by luck. But waiting for it would never happen sometimes. Most of the time, it will never happen. Okay, so you gotta decide which one you can give up, which one you can control. I won't say give up, control. If I can control it and I know how to fix it, so I'll put the deal together. Okay. Um, then the second one, cash flow solves all myth. Sometimes people buy and say, okay, it's renting for, uh, let's say $2,000, and my mortgage payment, PI and taxes and insurance are 1,600, and I may have some other expense, let's say another $100, let's say lawn mowing. 8,700, so I have a $300 cash flow, so I'm good. This is a good investment. That is not the case. Okay, you got to run the numbers because sometimes cash flow may be there. There may not be appreciation, or there may be another problem like vacancy because it's not, yeah, renter, good, qualified renter area. So your vacancy is going to be longer, so you are going to be losing money on that. So it is never, but everything, let's say if there is a vacancy of 2 months and you have had a $300 cash flow, okay, and average turnover in that neighborhood, in that property is, let's say, 2 years. So every year you are going to have a 2 year, 2 month to 3 month vacancy. That is the case. You need to have 1700 your expense 3 times, which is around 5100. So anything you made in the 2 years is gone. So is it a good deal at that point? No, because all you are left with is your tax benefit and you are hoping it appreciates well. Okay. Third one is DIY saves money. Some people think I can do everything myself. I'll be the handyman. I'll run the numbers. I'll collect the rent. I'll go and stand there every day to collect first day of the month and collect my rent. Um, Sometimes some of them works. Sometimes you may not have time, something emergency, family. Everybody has a family or work or something happens, you may not be able to do, right? So, and also there is a liability risk. If you do it and something that didn't fix it, you are liable. So, hiring a qualified, licensed, bonded contractor to do the job protects you from liability. So when you have to look at the liability part also. Let's take this example. This one is specifically for the perfect deal myth. Let's say investor A chases a unicorn deal for 10 months. Okay, he waited 10 months. Now we are into the 11th month. Meanwhile, investor B started same time as investor A, found it solid 7% cash on cash duplex in the second month. Okay. They started same time, second month, he found it, funded it, and closed the deal with clean. I'm putting it there, clean inspection, meaning inspection is going to come up with something, but clean inspection meaning for an investor it doesn't have structural damage or it doesn't have major capex coming up in next 1 or 2 years, right? That's what we are looking for in the inspection. Not there is a small crack somewhere or the windows are not sealed properly. Not those kind of things. Okay, so investor B, after being at the 11th month, wins over investor A because he went in, did the math, controlled whatever he could control, and he has a prior investment, and between his cash flow. I'm just giving it as an example. I'm not breaking it down to get and to have an understand. This is primarily a mindset. Okay, so the 68K comes from cash flow, appreciation, loan amortization, and the tax benefit. So he made 68K in that year. So who is the winner here? The person, the investor B, because he knew his risks, he did the calculation proper correctly, and he knew he knew what he could control, got into the investment, did everything, and it was boring process afterwards. Meanwhile, investor A is chasing every day, looking through listing, trying to figure out where is this unicorn. That is a lot of work. Okay, over 10 months, you put an hour a day, you do the math, how many hours you spent, you didn't get anything out of it, right? Meanwhile, investor B sent first 1 month, got into the deal. Then after that, he hasn't spent much time because it was boring, right? Once you are not doing anything, it is boring. You got to do. Hey, probably he's doing something else, but from the investment perspective, it was boring job. Afterwards, you collect rent and address any maintenance request. That's about it, right? Said sometimes people get caught into the perfect deal myth. Okay, I got it. That they read everywhere and blog and videos and uh, they everything is correct. I'm not saying nobody's wrong, but at the end of the day, it's analysis paralysis, right? You do too much analysis, you are stuck, or by the time they decide, okay, this is a great deal, that deal is gone, somebody else picked it up. Okay. Finally, the basic I wanted to cover on day one, and uh, the other one is I have a QR code here, which you can scan and fill it up. What it is about it is how much time. Oh, I did forgot to mention something. And going back, the flip in the whole strategy, there are four things determines which strategy you can pick up. Okay, it's based on your time availability, how much capital you have, what is your skill level to do the work, even like understanding, right? Some people don't understand what is needed to be done, certain remodel work, what are the things, because they are, if you are just depending on the contractor to say, usually your skill level is too low, right? Guys, then you are dependent on somebody. But if you know this is, then you can understand whether the contractor is giving a right code or knows what he is talking about, even to hire, right? Regulation is another one. So how much regulation you can manage? Do you want less regulation, or you are okay with complicated regulation and you are comfortable navigating it? Okay, so moving back to this quiz, basically the quiz is about what time, how much time you have, how much capital approximately. You don't have to be specific, and your skill level and the regulation you want. So if you fill it up within a day, I'll give you what all the strategies you can do. Okay, it is not just rental you can do, right? There are other things, flip or BRRRR. You can still do it with partnering with the investor because the flip as an higher return in the short term. Okay, if you are looking at, I don't want to be sitting on the investment for 5 years, 6 years. I want just to invest for next 1 year and get money back. Then I want to decide what I want to do, right? And the return on investment in flip is usually higher, okay, because it's short term, higher return, but also has higher risk than the other four, okay, because whenever you have higher return, you are going to have a higher risk because the higher risk you are taking. But most of the time, if you are partnering with the right or doing the right flip and did the math correctly, you may not lose, but your profit may shrink, but not lost. Okay, if you do the calculations, your analysis correctly. Just to give an idea how we help our investor clients, we do a discovery to figure out what their investment goals are, whether they have time, money, and all those we talked about. Then we talk to them about the strategies, which strategies they are comfortable with. So depending on that, we'll set up the criteria and we alert them, okay, we have this deal, this property is there for you to purchase whatever we need. Then we work through the underwrite because we help our investors to underwrite the deal properly so they have the maximum return, and while they are working with their, and they can work with their lender, in case they, in the case they are looking for using a loan. Okay, then the lender can set it up based on that to provide the investor the best return on investment. Okay, and also we do like I said, we are kind of full service uh, team. We do post closing support, specifically from vendor referral if they were, if our investor or any client in that case. We have a vendor referral, and we have vetted vendor. We do not just give a vendor name. All our vendor lists are all the vendors in our lists are vetted, and their work is verified. We go and check their work before, and talk to the individuals who receive their service, just to make sure we are not referring, or we have used probably 50% of our vendor list, we have used them for our own deals. So, and the other one is the checklist we provide for a starting investor, real estate investor. We provide checklist, like move in checklist, move out checklist, and what all the things they got to look for when they are as a investor. You are screening for tenants. There are list we gave, so you are not, you are in compliance with equal opportunity law and all those all the law related too, so you are covered from that perspective, and what you can ask, what you cannot ask in your application. So we give that assistant, so it's easier for somebody to get in. Okay. Then again, just want to make sure no investment is risk-free. Every single investment you do is going to be risk. Even if you buy gold, there is a risk the gold can lose value at some time because it's up and down market, right? So again, I thank you for joining the meeting. If you're listening to this recording, again, I am always happy to help. If you need any, if you have a scenario you want to run it, or you have a question about what we